Stocks pull back from all-time highs. The chart master's laying out an ultimate pairs trade to capture some upside. So Carter Wortham, Cornerstone Macro, is here to break it down. Hey, Carter.
How are you? Well, it was this morning's report was just simply getting long healthcare relative to the market. But before we look at the charts, it's important to remember when things get loved, it's often time to go the other way and vice versa. I think everyone loved tech in the autumn and hated financials and industrials and energy. And now, of course, it's the opposite. They hated tech until it came back a couple of weeks ago. What's hated right now is healthcare. Let's look at a few tables and charts. The first, it's a 3-month simple, you see it there, the 3-month performance spread. 10% plus for the market, the sector up 3. Look at the next one, 6 months. Nothing you don't know, but it's good to stare at the numbers. 6-month performance, doubling, right? I mean, the sector up 14, S&P up 22. 9-month performance, 21% for the sector, 48 for the S&P. So the question is, when you get a spread like this, is it worth calling it as so bad it's good? Take a look at the next chart. This is an all-data chart going back to 1981 when GICS sectors were first created or changed, before that different nomenclature. The bottom panel is relative performance of the healthcare sector to the S&P. We have come down to a trend line that the sector has bounced off to the penny every single time. Now, we're going to make the bet that that's going to happen again. If it doesn't, we'll take measures, but that's the bet. One more chart. This is simply the ETF, the spiders. It's a conventional rising, ascending triangle. Doesn't matter what you call it. It just broke out. And then keep in mind this, in terms of valuation, for those who care, the PE spread with the S&P right now is the lowest since 2009. The price to cash flow spread, the lowest since 2007. The price to sales spread with the S&P is the lowest ever. So can it be that it's cheap? Sometimes value traps exist, but we think you get offense and defense from healthcare. The market's going to keep going and going. Healthcare will participate. It's got a lot of juice in biotech. If it's not, there are very defensive characteristics in healthcare that I think will serve you well.
Is there a subsector within healthcare, within the XLV, Carter, that you think fares better than others, since it looks like pharma is about 37%, but so is healthcare equipment and supplies? It's a very diversified sort of basket.
Right, with domination in the big pharma names, of course, and things like United Healthcare. We like the managed care group. I think that's sort of heads you in, tails you in area to be in.
Okay. Carter, good to see you. Thank you. Carter Braxton Worth of Cornerstone Macro. Karen, I asked that question for you, since big pharma has recently been a favorite trade.
Yes. I'm used to having things in my portfolio that are so bad they're good, or so ugly they're cute, or whatever, stuff like that. But, you know, as Tim likes to say, when things go from terrible to just bad, that's when you make the most money. I don't even think things are that terrible, but I do think the valuations for big cap pharma relative to the market are really cheap. It's a big position for me, spread out over a number of names, but I think there's a lot more to go. And I'm very glad Carter brilliantly thinks so as well. He must be right. I hope he's right.
Really smart, since he agrees with you. Tim,
really
what area of healthcare do you like right now? Tim, sorry.
I'm sorry. That was to me. Yes. No, hi. How are you? I think mega cap pharma, first of all, the combination of balance sheets and valuation construct. I like J&J and all the noise around the vaccine. I don't mean to be insensitive to what are real health dynamics at work here. I just mean that's not really moving the needle for the company in the long term, nor did we think it was going to. It's really about a pharma pipeline overall. But again, when you look at medical devices and you look at some of their consumer products businesses, to me, this is the most defensive of the mega cap pharma. But like Karen, I think these are very easy valuations to get comfortable with and stay with even through difficult periods in the market.
Yeah. Guy, I thought it was interesting that Carter said managed healthcare specifically is the area that he liked.
Yeah, I mean, look at some of these names that have been on fire. And you talked about some of these devices as well. Medtronic within a whisper of an all-time high. UNH, I think, made an all-time high either today or late last week. We talk about that. Even the hospitals, Tenet Healthcare, which was left for dead in the early, $23 area. Look at the move that stock's had since then. So I'm with him. And the XLV, which he mentioned, again, closing right around an all-time high. So I'm with Carter Braxton Worth on this one. If you're looking for an underloved big cap pharma name, Lilly has pulled back. Decent day today. I think Eli Lilly is the best in breed.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.